Another tough story tonight. The government-sponsored mortgage modification effort known formerly as the Home Affordable Modification Program, or HAMP, is in big trouble. Supposed to help keep struggling homeowners from spiraling into foreclosure. But numbers we got today show that instead of going down, newly initiated foreclosures catapulted 31.2% over last quarter. In fact, more people got their loans modified by going outside the government program. The government's program price tag to you, the taxpayer, at least $50 billion. Other add-ons could put it up to $75 billion. That's an awful lot of money to spend, period. To spend that dough on something that just ain't working is an outrage. Here now we have CNBC contributor Keith Boykin, along with Matt Englert, managing partner of KEL Attorneys, one of the top foreclosure attorneys in the U.S., defending over 10,000 clients. That by itself is not good. But Keith Boykin, let me go to you. To me, all this wasted money did was interfere with market prices and market processes and made the problem worse, my friend. What's your take?
Well, there was no market when the housing market basically collapsed in September of 2008. And since that time, we've been trying to dig our way out. You're right. It's a $50 billion program, but obviously all that money hasn't been spent. The money that will be spent will go to modifying loans for people who are in the process of repayment or trying to make payments. But the big problem we're dealing with, Larry, is unemployment. It's still 9.8%. Until we bring the unemployment numbers down, it's hard to make sure that we can reduce the number of foreclosures. So you're basically arguing about the existence of something you can't measure until you know what the number of people are who can benefit from it.
Keith, I agree about the unemployment problem. That's another issue. We spent $1 trillion of failed stimulus spending, and we still got 10% unemployment. But I want to go to Matt on this because, Matt, markets are always there. We just may not like the results of the markets. What I'm suggesting is that all this money the government spent, and the $50 billion a low end, that's just for the mortgage mods, narrowly defined. When you go through tax credits and other giveaways, a lot of people estimate $75 billion. Listen to this stat, Matt. 650,000 borrowers started in the government mortgage mod program. 650,000. Under 2,000 actually got a modification. Now, that is pathetic for a $75 billion price tag.
Yeah, but Larry, that is not the people's fault who are in the program. That's a result of the banks not following through with their end of the obligation. The HAMP program in and of itself has been a disaster. In my opinion, the reason why it's a disaster is because the banks won't do it. There are many people who qualify for the HAMP program, but they can't even get the bank to honor it. They have to go out and hire people like me to force them to do it. They shouldn't have to do that.
But why should the banks do it? In other words, if it's in the bank's own self-interest to take, let's say, 50 cents on a mortgage dollar instead of 100 cents or instead of 0 cents, maybe they'll do it. But you understand, Matt, the biggest problem here is the structure of the mortgage finance market, namely all these mortgage-backed bonds, which are owned by institutional investors throughout the United States, the rest of the world, sovereign wealth funds, and so forth. In other words, the massive legal questions, everybody owns a piece of Joe and Sally Main Street's mortgage. Therefore, this modification idea, Keith, I'll let you take a whack at this because I think this is the structural problem. This idea the government could magically force a modification never made any legal or financial sense.
Well, the idea was never, Larry, that the government was going to force all banks or mortgage lenders to make modifications, but they were going to try to pressure them to do that. I'm surprised, but I actually do agree with what Matt said about the banks who are at fault here. In large part, the government is not perfect either, but the banks have been making some modifications for temporary purposes, but they haven't been converting those to long-term modifications or permanent modifications. Interest rates are incredibly low right now. We have $2 trillion of capital sitting on the reserves for capital for I can't even finish the words here for the balance sheets for banks and companies today, and the banks are doing quite well with the assistance of the federal government over the course of the past 2.5 years, but we haven't seen that return in the investment in terms of their investing into the economy, into the average homeowner. So we need to see that turnaround, Larry, and unfortunately we're not seeing it from the banks. I don't think it's a problem of the Obama administration. You can't can't throw money at a problem and expect that to be the solution.
I'm sorry,
but that's not what they're doing.
I don't want to defend the banks, but I can't blame the banks either, because there is a whole market-driven process here, Matt Engler. You may defend these guys, but if the banks and the other lenders, remember, in many cases, the banks are representing consortiums of investors who own this mortgage-backed bond paper. There's the real problem.
Not really, because most of the investors are better off by keeping the borrower in their house and modifying their interest rate. You're skipping over a huge point, Larry, and that is we didn't force the banks to participate in the program. We gave them the option to do that. But we said to these banks that we gave billions of dollars to bail out. We want you to do this program, and they agreed to do it. And what the other guest is saying is that they don't have to. That's not accurate. Actually, if they agree to participate in the program and the borrower does qualify based on the criteria that they lay out, the lender has to modify your mortgage. Unfortunately,
why isn't that transaction simply between the borrower and the lender? Remember, Matt, I'm going to disagree with you. I'm going to tell you about some finance here. You got sovereign wealth funds that do not agree with you. They do not want to change that. They're in for the long haul. They're willing to take a risk on that. Banks may represent them, but the bank doesn't own the paper, as you well know. Now, what I want to know is, why is there a government role here? These were contracts made between borrowers and lenders in the private sector. Why can't they work it out over a period of time, as is occurring right now, even though we're out $75 billion of wasted money?
Larry, I don't know if that was for...
You can do that. And listen, before it came out, we were already representing people and we were getting them modifications. But what HAMP did was it laid out guidelines for it, and it asked lenders to participate in it. And I think we need guidelines. And the reason why the government did it, Larry, as you well know, is to stabilize the real estate market.
No, it didn't.
Do we really want all of the...
No, the market...
I know it didn't.
The market price drop and the foreclosure rate stabilized the market. I mean, look, what you're arguing, Matt, is that the government should pay $75 billion, $100 billion, $500 billion, the sky's the limit, in order to subsidize and reward bad behavior. And if that bad behavior was on the part of the bank or on the part of the borrower, they're both guilty. Why is the government subsidizing
But we did it for the banks,
behavior?
Larry.
Who said?
But we did it for the banks as well.
No, I think you're both missing the point. It wasn't just for the banks. It wasn't just for the homeowners. It was for the economy. Remember where we were in September 2008? Again, the economy was about to collapse because of the mortgage crisis. If we hadn't done something then and continued the process, we would be in a disaster economically right now. So I don't think it's a perfect program. I agree with you, Larry, on that.
All right.
But you had to do something.
We'll agree on that. But I will tell you this. The faster market prices adjust, the faster we're going to get through this housing thing, the more government interferes with the marketplace, the longer it is going to take. That's the history of that animal. Keith Boykin, thank you. Matt Engler, thanks very much.